Happy Sunday, everybody. My name is Advent or Desi, depending on where you know me from. Welcome to the Trader Circle, July 13, 2025. For those who may be new here, pretty much what this is a group coaching session, so you guys can pretty much ask me whatever you want. As always, I do appreciate when you guys fill out the questionnaire, just so I know what you want to go over for your question. But we'll pretty much talk about whatever you want for the next hour. As always, there's nothing such as a stupid question. So whatever you guys want to ask, it's open. We've all made many mistakes. I definitely have, and you're not the first, and you're not going to be the last. So something to keep in mind. Parker, since you had a good question, I want to go over that one first. You mentioned your question is more so tied to risk management. So let's write this. Let's bring up my chart. All right, so $2,500 account. Question is essentially, what should you be aiming for? Whether it's 5%, 1%, or 20 bucks. Um, I don't like to necessarily look at a trading session as I'm going to be aiming for this dollar amount because that could be a little dangerous in the sense of, let's say you're aiming for 100 bucks and you're at 80 bucks. You're like, well, I'm at 80 bucks. Let me just take another trade to get 100, right? But what if that setup or trade is not yours? You're kind of just taking it, focus on the money. So what may happen is you were right there to 100 bucks, and then let's say you lose that trade. Now you're down to, 60 or 50 bucks. Then what happens after that? You're like, well, it was at 80. Let me take another trade that may not be mine so I can get back to 80. And then now you're at 40 or 30. And then you continue doing that, and now you're negative, and now you have nothing to show for the day except a negative balance. So the way I like to look at these things is I don't like while I do have like a number in my head, like I would usually aim for 500 to 1,000 a day if the market gives it to me, right? So I would look at it more so in that sense. So let's say in your example, let's say if I had a $2,500 account, I would probably risk between 2 to 250 per trade. And I would try to keep my losses under, let's say, 125 if you can help it. So that'll essentially give you about a 50% loss per trade. Are you trading options, regular stock, futures? What exactly? And you can come off mute. You can put it in the chat, whatever you like. Trade options. Cool. Welcome, Donna, Adrian. So you can have a number, as I mentioned, like what you can aim for. Let's say you get into a trade of, let's say 250, a 20% gain is pretty much $50, right? However, I would more so look at it in the sense of I'm only going to be looking for my setups and taking pretty much whatever the market gives me, right? So let's say, for example, last Thursday, as I mentioned, I usually aim for 500 to 1,000, and I took this trade. And if it would have hit my last target or my second target, I would have left with about six to $700. However, the trade only hit target one, and I only left with about $343. So that's all the market gave me. While yes, I would have wanted 500, between 500 and 1,000, the market only gave me 343, right? And then I just got off after that because it was about to be lunchtime, and I don't trade after lunch. So look at it in the sense of whatever your setups are, just take that. If the market gives you 50 bucks, cool. Take your 50 bucks, go home. Tomorrow's another day. If it gives you 100 bucks, even better. If it gives you 250, 500, whatever it may be, maybe you have like a banger trade. Excellent. But we always want to look at it in the sense of I'm only here to take my setups and I'm only here to take whatever the market gives me. Anything outside of that is not my control. Because you can say, I'm going to make $100 today, all you want, but the market might have different plans, right? So always look at it as in a perspective of like your system and your plan and your disciplines. And then the money is a result of following that, whatever amount you may get. And sometimes you also may end red. That's cool too, right? You know, being a good being a good trader is being a good loser because you don't want a loss to get you on edge and then make more mistakes and lose even more money. So losing is part of the game or part of the business. So that's what I would probably do. I would be doing this. Absolutely. How long have you been trading for? You've been consistently trading for a month, but I've traded for a year or so in the past. Are you consistent in your returns, like in your trading? Like, are you consistently making money week in, week out? Gotcha. I'm going to imagine that you may be using a real account with your real money. I would probably go back to paper and reset your paper account to this amount that you're going to use in your real account. And until you're super clear on even something as basic as where your stop loss should be, you shouldn't be using real money until you at least have a proper plan down, right? You don't really want to use real money right now because you don't want to lose your $2,500 as you learn what you're doing. Sure, you may get a good few trades. It's all probability anyway. But you need to have a full plan. You can't have a half-assed plan. If you go in with a half-assed plan, you're going to get half-assed results. So what I would do if I were in your shoes, I would go back to a paper trading account and get everything in order. If you don't have a proper strategy, you're more than welcome to look at the strategy that I use, which is the strat. If you go to my YouTube channel, I have some videos on the strat that you can look up. I have a playlist dedicated to it. So you can start there. Cool. Let's see. Adrian asked, what's your view on leaving runners after securing initial take profit one? I'm definitely all about runners. Now, on that trade that I said that I took on Thursday that left like 343 bucks, I would have gotten a little bit more, but because I had to get off, and usually I'll leave like my position open, like with my stop in profit after I hit the first target. But because I had to leave the house, I didn't want to leave anything open, like at all. And I don't like managing trades when I'm doing things outside. So I just cut the whole thing off at target one. But to answer your question, let's go to that trade on Thursday, which was on hold. So it was pretty much this W setup that I was looking for. We get that move down, move up, move back down, then move back up. My first target was this high to be taking that red wicks high right there. So this will be take profit one, take profit two would be up here. And then my stop loss would pretty much be under this low over here. So under that low right there. Now, once this hits target one, which it did over here, I would move my stop loss up. So in this case, I moved it to plus 5 ticks in profit. So if it did reverse, at least the commission would be covered on the remaining contracts if it came back to my entry, which if I didn't cut the full thing off here, it would have came back to my entry over here when it came back down. So let's assume that it didn't, or actually, let me see if I can find one that actually worked out properly. I think somebody mentioned those on NQ the other day. I think they're in New York. And every time I want to find one, I never find it when I'm with you guys. We can use this one, even though it's not the best example. But let's say we get in here, stop loss is there, and we're looking for this high to be taken out, right? You can probably aim for these other highs, but there's no way I'm going to let 74 points on NQ go against me. So as I mentioned, first target is always a center. You can use the body or the wick. Depending how far it is, I'll probably use the body. So let's do target, and then let's do the second target like this. So after we hit the first target, pretty much going to move my stop loss to, let's say, +5 ticks or 1 point or whatever it is that you want to use. So it's pretty much a risk-free trade now, right? Now, let's say I have three contracts. I take one off at the center. I take a second one off at the second target, and then I want to leave a runner. What I would do after my max target is hit and I want to leave a runner, I would trail the candles, right? So in this case, we hit target two. Now I have one more left. I'm going to bring up my stop loss. Let me make a fake stop loss and we'll just follow it with this box. So as soon as this hits target, I'm going to move my stop loss under every closed candle on that time frame until price reverses. So once this candle closed right here, after it hits the second target, my stop loss is now under this candle. As soon as this candle closes, I'm moving my stop up, and so on and so forth until I get stopped out, which would happen right over here on this red candle once price reversed. So I squeeze a little more juice out of the trade. Now, sometimes if it's a nice trend day, you're not really going to have a pullback for a while. So I like to use this to maximize the runners. Sometimes, you can take a run like let's say if this trade went like an additional 20 points, I would probably take the runner off there because, 24 points on NQ, nothing to sneeze at, right? But if not, if you're okay with, having a retrace 15, 20 points and it reversing, whatever works best for you. But that's pretty much what I do, Adrian, when I'm leaving runners. Hopefully that whole explanation made sense. I personally usually use the 5 or 15 minute to trail my runners. I know a student of mine uses the 30 minute or 1 hour to trail it. She has a lot more patience to stay on the chart all day. I don't, so I don't use a 30 minute or 1 hour to stay in, but she does, and it works great for her. So definitely experiment, see which one may be better for you guys. Cool. Donna, welcome. You asked which indicators to use in different time frames, like for the year, month. You usually use the 50, 100, 150, 200. I'm assuming EMAs and stuff. And then intraday, a 9 and 20 EMA or MA. What you're confused about is MACD and ATR. I haven't used those indicators besides ATR in like 3, 4 years, so I can't really speak on it. I find just following price action a lot simpler, right? Let's throw up some Indicators. It's been a while. I'm assuming it's the EMA that everybody uses. Uh, all right. So this is the 20, I'm assuming is that one. So it's 50, 120. Let's say for the sake of the conversation, you use MACD and ATR, but when would I use the 2040 EMA or 921? I would not use any of them personally. And if you are relatively new to trading, I would even encourage you not to use any EMA because they are lagging indicators. So let's just look for, all right, let's set this up and I'll show you an example. So this is the 9. Can we copy this? I have one of my mentors who still uses his EMA stuff. I personally don't care for it. All right. Cool. So here we have the 9 and the 20 EMA. Let's just say for the sake of the conversation that you're looking for, if I recall correctly, the general EMA strategy was like when it crosses over, you either go short or you go long. So let's say in this example, the EMA crossed basically on this candle, right? I'm assuming you're going to get in as soon as it crosses, which may be somewhere around here. However, with price action, it told us to get in for the short up here once price went down right over here to the downside, once it broke this low. So you're getting a little later when it comes to using EMAs because they're lagging behind what price is actually doing. Now, let's say you want to look for a long, right? Whoever's waiting for the EMA crossover is getting in all the way over here. So pretty much once this crosses back over the 9, right? However, with price action, we've already been in the trade all the way back here, right? So we've already been in the trade for, what was that, 10:25? Pretty much an hour earlier than the EMA traders, just using price action. That's why I just prefer price action. To me, it's just cleaner. If the EMAs help you, hey, definitely use it, whatever makes you guys money. But I would probably, if I were you, just use price action. If you do want to use EMAs, see if they can help you. I personally don't care for them. They just add more noise to my chart that I'd rather not look at. And then MACD, I haven't used that in a long time. I think it's like similar concept. If it's like crosses over with something else, you can take a long or short. But again, I personally don't care for it. You can experiment with it and see if it's good for your strategy and whatever works for you. It definitely doesn't work for me. It just adds more confusion. And then like one indicator will say go long, another one will say go short. It's like, all right, what are we doing here? But yeah, that's what I would personally do. Of course. Welcome, Doc. Let's
Hey
see.
man,
Hope you're on vacation right now, or are you back?
I'm here. I'm in the US.
Sweet. We were speaking about indicators, like Doc. Doc uses his like own type of indicator system that he made, and it works fantastic for him. So as always, kind of try to formulate something that works best for you. I personally, again, don't really care for the indicators just because it's just more things that I have to think about. But if it works for you, please do it, right? Whatever makes you money. Also, whatever question you guys have, you can definitely put it in the chat, come off mute, whatever you want. In the meantime, Adrian asked, when focusing on price action, volume is important, but it's kind of hard to gauge. I've had perfect setups, but sometimes volume is low, so the move doesn't happen with magnitude. You can do that as well, Adrian, like use volume with the setups. I don't use volume, as you can see. I used to use it, but to me, I don't really care anymore, honestly. I just try to make things as simple as possible for my brain. What I would probably say in that example that you just mentioned, like if your setup does appear, but volume is low, you may want to skip that one, right? Because it's not necessarily going to be giving what it usually does when there's a lot more volume in, right? Like I'm pretty sure if I had volume on, just speculating because I haven't looked at it in a long time, sometimes there are some W's that setups, right? Where instead of hitting the center and then let's say continuing higher, it'll get like right there to hitting the center, then I'll reverse back down and keep on getting killed down. So maybe that specific one that I took that failed, the volume wasn't really there as it usually is, right? So in your case, since you use volume, you can just eliminate some things, right? So if a setup appears, as I mentioned, and volume is low, just don't even bother taking it. You really want to take the better versions of your setup, right? Like for example, everybody's pretty much clear on what a W looks like at this point, right? For the setup, let's go on the 15 minute on YM on Friday. All right, so the chart looked like this. Based on what we were just looking at with that other W, do you guys see a W here? Anything in there? Does it look like what we were just looking at earlier? Yes, no, maybe, perhaps. There's no wrong answers. Well, actually, there is a wrong answer, but whatever you guys want to say. Did you guys see a W there on the 15 minute in the box that I highlighted? You do? Interesting. So let's write down the prerequisites for the W. Step one is a move down from market open. Step two is the retracement. Step three is if as it's going to be completing a dead cat bounce or bearish CTO or H pattern, makes a higher low, and then it reverses back up. Do we see that over here? Like this? Like on the right? I guess if you forced it, yeah, maybe. So yeah, we can see here that there is no W, right? And I was when I was trading with somebody on Friday, they were like, I'm gonna take this W on the 15 minute on YM. And I'm looking at the chart, I'm like, I don't see any W anywhere on the 15 minute, right? Remember, the easiest way you can just take note of it, we don't want to take lowercase w's like this, right? Because there is no second target. The second target is the completed W in this area, and this is the first target. If you hit the first target, the W is done. There's nothing else for you to do, right? So we're always going to be looking for, I guess you can say uppercase W if you want to look at it that way, right? So over here, there pretty much is no W at all. Sure, if you want to force the trade and take a poor version, you can definitely take this. I definitely would never take something like this. It just ended up chopping, right? We want a nice clean move down for the left leg. So looking at this setup, if somebody were to take it, there's several things that we don't want to see here. One, if you want to use this as the left leg, there's a big wick. There's selling pressure. I don't want to see a lot of selling pressure wick wise, right? Going back to NQ, actually, what ticker? There was a ticker that had a W on the daily that I was going over earlier. Let's go back to the 5 minute for now. So going back here, right? Obviously, we have the selling pressure, but we have the proper leg for the left side of the W, right? Compared to the 15-minute one that I was just showing you guys. Welcome, Lamuel. So ultimately, what I'm trying to get at, Adrian, is that whatever your setup is, take the best version of it. It sounds like low volume when the setup appears is a lower probability version of your setup. So definitely look for the better ones. Don't take the poor ones. Even if it does work out, right? I rather let a poor trade work out than take a poor trade and then lose. So we're only really here to take the better versions of the setup. And if you find yourself forcing a trade or like forcing something that's not even there, you got to take a step back and be like, all right, what's going on? Like, why am I even forcing a trade right now? Right? We should never approach the market in a desperate state or in a state that's like, I need to place this trade because you're going to mess yourself up. Let me know if that helped or if that made sense. Oh, yeah, cool. Nice. Yeah, every day is definitely not a trading day, right? It's okay to take breaks. Contrary to popular belief, in my opinion, less is more, especially when it comes to trading. I used to take anywhere between like 10 to 20, 15 to 25 trades a day way back. Now I probably take anywhere between 2 to 4, 2 to 5, but on average, 2 to 3 trades a day, if that. So we only really want to take the absolute best versions of the setup. And I make more money now than I did when I used to take even more trades. Of course, if you're a scalper, you can disregard that because scalpers are in and out. They're taking like 50 trades a day. I don't know how they can do it. My brain will definitely implode, but whatever works. It depends. It could be a mixture of both. So on Thursday, I only took 2 trades. I took the W on gold, and then I took the change state of delivery on ES. And then sometimes I'll be looking at Tesla. So I look at Tesla from Wednesday to Friday because the contracts are cheaper, especially when IV is high. So it could be one trade for options. It could be 2 trades for futures. It could be one and one. It could be nothing for futures and only for options and vice versa. It really depends if the chart wants to give me a setup that day. If not, it's fine. Like this past week, I did not trade on Friday and I did not trade on Monday because nothing set up for me. But I did trade Tuesday, Wednesday, and Thursday. I took one trade on Tuesday, which lost. I took 2 trades on Wednesday that won. And I took, I think, one. Let me see, I have my journal up here. I think 1 or 2 trades on, oh no, one trade on Thursday. That was the gold, the W on gold. Or am I swapping the days? Yeah, Thursday, no, Thursday was the gold trade. Yep, so that's one. And let's change the state of delivery. Wasn't there. Yeah, it was one trade on Thursday and two on Wednesday, and then one on Tuesday. So pretty much 4 trades this week. Cool. Whatever questions you guys have, put it in the chat. But yeah, Adrian, every day not a trading day. If you're not even in the mood to trade that day, take a mental day, right? And don't ever get upset when like nothing happens in a specific day, because that means that that specific day is setting us up for a potentially better trade the next day, or maybe in 2 days from then. Who knows? Like when we get inside bars on the 4 hour or the daily or what have you. Cool. Any questions you guys have? What's the best time frame to use for entry on options? That is up to you. I I can't really answer that question in the sense of like a blanket statement. It's really what is best for you. Do you journal at all? Do you journal any of your trades? You haven't? I highly recommend you start journaling a lot sooner than later. For example, oh, whoops, my chat disappeared. So here's my trading system. And here are my setups and the time frames that I take them on. Based on journaling, these are the ones that work best for me. And of course, swing trades, I don't put here because swing trades are just, daily, weekly, monthly setups. But for day trading, these are pretty much the time frames that I use. Based on my journaling, this is what works for me. Some people like using the 1 minute, some people like using the 10 minute, some people like using like the 2 hour chart or the 12-hour chart, or even like weird ones, right? I know somebody who uses, I think, the 30-second chart. My brain would blow up with 30-second chart, but they enjoy it. So if you haven't already, definitely start journaling so you can collect all of this data and get clear. All right, cool. The 2 minute actually doesn't work for me. The 5 minute may be better. The 30 minute is actually better for me, maybe compared to the 5 minute, whatever it may be for you. But journaling is going to help you identify that. Cool. What else you guys got? Again, no such thing as a stupid question. Anything goes. We can go over your struggles, how your week went, whatever you want. Fantastic question. Change of character. I have no idea how to even identify that. So I can't really tell you what the difference is. To me, even change in state of delivery is just a fancy word for market structure shift, but with specific things that we look for, right? For example, let's go to the change in state of delivery trade that I took on Wednesday for ES. All right, so this is a 1 hour liquidity area right here that I marked on the higher time frame. I remember because I went over this trade like 5 times already. So as always, step one for the chain set of delivery is going to be a big move down. And to me, the way I like conceptualize it, since I've seen this setup happen a lot of times for the last year or two, I just never knew how to get into it, right? So first step is H completes. Oh, whoops. Yeah. So H completes, liquidity sweep, strong candles. Well, let's just use strong candle, close, and then pretty much targeting previous liquidity levels. Can I spell today? Cool. So here, what do we got? We got the H that completed right there. And when it completed, it swept liquidity right here at that 1 hour level that I had. Next thing we want to look for is strong abrupt reversals. So a big reversal immediately right here with nice strong candles creating fair value gaps. We have a little mini one there and another one there. So to draw it out, little one there, and then we have another one here. Now, after this is done, again, this to me, this is just a fancy term for market structure shift because we were making lower highs, lower highs. Now we made a higher high right over here and a higher low right over here. So that's pretty much how I look at a change state delivery. Change of character, I'm the wrong person to ask. I don't really study ICT in full like that. But this is pretty much how I look at change state delivery. Sweeps liquidity, then we get an abrupt, strong reversal in the opposite direction. And then we're aiming for these previous areas. And then it was slow grind up on Wednesday. Can you see my fib setup? Which one? Like the W retracement and the tweezer, those fib setups? Uh,
Sorry, no, I was talking about how's yours set up? Like
like
when you first set it up?
like my levels.
Correct.
So I have a bunch of different ones depending what I'm looking for. I can only really show you these two because these, one of my mentors, helped me set these specific levels for a strategy that he taught me, and I'm sworn to secrecy unless you want to pay for my legal fees. But um, you can use these deviations. So pretty much it's the 2, 3, 6, 3, and you can pause the video, when I put this back up on YouTube tomorrow. But pretty much, actually, let me take a screenshot and just put it in the chat. Hello. The 0 and the 1 are always going to be there as by default. Some people don't care to see them, so you can take them off. But essentially, the 236, 382, 50, 618, 786. And then you can have the deviation levels. So 1.5, 2, 2.5, -1, -1.5, 2, -2.5 for additional targets if you want for whatever strategy you're using. But yeah, this is pretty much the fib nut levels that I use. And depending what setup I'm looking for, I'll use specific ones when it comes to them. So for example, the W retracement setup, I haven't taken this in a while. Let's see if we can find one. For those who know of the ICT 2022 model, it's pretty much a similar concept. I'm just looking for the higher low instead of the lower low that sweeps liquidity. Let's see. Let's look at the 1 minute, which might, I don't look at this setup off on the 1 minute, but we can probably find more examples on that time frame. Um, this might be one. Let's see. Not exactly, but we'll use it as an example. So the W retracement is basically a breaker block once I actually put two and two together. I'm usually taking bearish breaker blocks, but essentially the W pretty much completes. Price comes down to retest that center area. And once price reverses after the W completes, I'm drawing my fib from the bottom right to the top area, whatever that may be. So let's say it's somewhere like this, right? Or whatever it may be. What I'm looking for is if the center area of the W matches up with the 50 fib, I'm going to have a limit order sitting here to get in and then take us back up, right? Now, you can also do this with the 61 fib as we have here, right? Price is the not the cleanest W, but just for sake of time, we'll use this one. Inside of this fair value gap as well, which I'll make a little note of. So center of the W, price comes down near the 61 fib that matches up with that. You can have an order sitting there. Your stop loss can either be under the 88 fib or under the bottom right, whatever works best for you. And you're aiming for this high up here to be taken out. Of course, you can use some fib targets up here as additional targets, but we really want to see this be taken out up here to continue the bullish trend up as we got over here. If a fair value gap forms in the center of the W, that's just additional confluence for the trade. But what we really want to see is either the 50 fib level or the 61 fib level pretty much be in the center, and then we're going to have an order sitting there. If you're trading options, you can't use like a limit order as we would for futures. Technically, you can with as like a conditional order, but you can just mark it by, or that's what I would do once it hits this level here. But yeah, that's one example of how I would use fibs. What else you guys got? We got about 10 minutes. Nothing else? You guys are masters? Cool. I'll be expecting some results next week. I'll give it another minute. If no other questions, we'll wrap up and enjoy the rest of our Sunday. In the meantime, keep an eye out for crypto stocks. Got a New all-time high on Bitcoin. So that's going to be moving. Yeah, Lamo, definitely go on my YouTube channel and I have a journaling video there that you can check out. It's pretty much like an hour long on pretty much exactly how I journal. Oh, an inverted FVG. From my understanding, an inverted FVG is basically, let's see if we can find one. What's my YouTube channel? After all we've been through? Here's the YouTube channel and the direct video. Uh, I'm just messing with you. That's the direct video to the journaling video that you can check out on the YouTube channel. Of course. All right, inverted FEG. Let's see if we can find one. Oh, I think this would be one. I could be wrong. Again, I don't trade ICT or study ICT a lot. So we have one fair value gap there, and then this other inverse one because it's a bearish one. I think the inverse one needs to overtake the entire prior FVG, I believe. For those who may be more versed in ICT that are in here, definitely let me know. But I believe this is kind of the idea of it, right? So the way, at least it would make sense to me if I'm understanding how they take the trades, is essentially the fair value gap, super strong buying. So whatever buyers got left behind here, there should still be buyers hanging out there, right? When an inverse fair value gap prints, and we have a strong down closed candle, right? We have this body pretty much closing almost entirely here, and it creates a fair value gap. That's letting me know that whatever buyers were here probably got smoked and they're no longer present. So sellers are probably going to take over and take price down. So it looks like when we created that inverse fair value gap, price dipped back into it where they kind of overlapped in these wicks here and then kept on getting sold off to the downside until it finally got killed all the way down. So that's what an inverted fair value gap is, at least as far as I know. Hopefully that made sense. Sweet. Thank you, Lamo. Adrian, when it comes to ICT concepts, from at least what I learned so far about it, we don't want to take, at least what other people say, you don't really want to take fair value gaps like in and of themselves. You need like additional confluence when it comes to that, right? Like none of my setups are based on fair value gaps. Fair value gaps just add to the trade, right? Besides maybe the chain state of delivery, where I need to see a fair value gap form. But the foundation is not a fair value gap. The fair value gap is just adding more confluence to the trade. So if you've been taking fair value gaps like kind of in and of themselves, as far as I know, they're not necessarily that well like to take, and they don't work that well like that. So you always want to add like other things to it, like did a sweep liquidity. Let's say for an example, that we head up and then sweep liquidity, and then we just got obliterated to the downside, and then come back up and tap into fair value gap, and then come back down, right? So additional pieces of confluence. Sweep liquidity up here, big move down. We have a displacement candle that pretty much closes under this level where that used to be support. Now this is no longer support, probably going to be resistance. So we shouldn't have any buyers hanging out in this area. Comes back up, sellers get filled and take it back down. Market structure shifted as well. So I always want to look at additional things and then use fair value. I have to like sprinkle it on top. Yeah, patience is definitely going to be a big one. One thing that may help as well is for some ICT setups, it's, once you get in or once it sets up, you're just waiting, right? So if you had like a short hanging out in here, if you had a short just hanging out in here, and then let's say your target was down there, you can just automate the trade in full. Literally just set your alerts, put your sell order with your stop losses in place, and then go about your business. And then you get alerted when your alert goes off, whether you hit profit or not. Because just staring at the screen is not going to make it go faster and it's not going to make it go slower. And that helps me sometimes. Like if nothing is happening, I'll just set my alerts and, go for a walk until something happens and then I'll come back. Sweet. As we wrap up, what was everybody's biggest takeaway today? What was the biggest thing that you learned? It could be big, it could be small, whatever stood out to you. Yes, sir. Patience and taking your best setups, whatever that may be. Quantity or quality over quantity, especially when it comes to trading. Unless you're a scalper, then it's really just quantity. But, I'd rather take one trade and make 500 bucks than take 50 trades to make 500 bucks. One 100%. Journal your trades, be patient, and take what the market gives you. Actually, I haven't done this in a while, but I'll probably do it before we wrap up here in a few minutes. Um, Something that I want to share with you guys. You're probably going to be hearing a lot of judo references from me because I started taking judo recently and I freaking love it. And it's interesting, like being new at something again. Obviously, me being a white belt, brand new to judo, don't know anything. I found it fascinating how the sensei or the master and the other black belts were all doing the same practices, right? So, for example, we're all doing the same warm up. We're all doing the same practices. Like, for example, when was it? Friday when I went. The sensei, after like 5, 10 minutes of like, warming up, stretching, whatever else we got to do, he had us roll for like 5 minutes. So the first thing they teach you in judo is how to fall properly. Because if you don't fall properly, you're gonna mess up your head. You can mess up your arms, your shoulders, and all these other things that can happen and get injured, which you don't want. So we were practicing how to roll correctly because you can definitely roll incorrectly and mess up your shoulder or, land bad and X, Y, and Z. And the same thing that I was doing as a white belt, so was the black belts, right? And what I'm trying to get at with this point or this reference is when it comes to trading, there are foundational things that all traders must do. For example, risk management is always key. That's number one. Disciplines in your practices, patience, journaling, right? Everybody wants to get the results of a professional trader, or everybody wants to be able to fight or, you know, have techniques like a black belt, but they don't want to do black belt things, right? And it's like doing these tasks day in and day out, right? Sure, journaling may be a little annoying. I use an online journal, so it's easier for me, but some people might be lazy to do their journal. But the way I always look at it is if you can trade for 3, 4 hours, you can journal for 20 minutes, right? There's really no excuses. So always look at trading in the sense of all of these foundational things that's going to come into play when it comes to trading. And they're pretty much a forever thing, right? If you're going to be trading, you're going to be pretty much journaling forever until you stop trading. If you're going to be trading forever, you're pretty much going to need to be practicing your discipline and your patience forever. And it's really just mastering it and getting better at it, right? So as you progress through the levels of the ranks or whatever analogy you want to use, you'll get better at these things, right? So like a new trader might be frustrated, like, oh man, I'm losing these trades. This sucks, this and this and that. But it's like, yeah, you're supposed to suck. You're supposed to lose a lot of trades in the beginning. That's how you learn, right? Like even in judo, me making like mistakes, sensei or the master's like, hey, that's good, but it's actually like this. Put your foot here when you land, or put your arm there when you go for the throw or for the grab or whatever it may be, right? Little tweaks over time that get you better so you can master whatever it is, right? I used to get annoyed a lot more when I would lose a trade. Now it's just part of the daily routine. Cool, you lost a trade, move on, right? Don't take it personal. It is what it is. If you win a trade, same thing. Cool. I did what I was supposed to do. I got in the trade and followed my plan and I won. Cool. Let's move on. Right? So a lot of these things over time get easier. All of these frustrating moments will just be part of your trading routine, part of your trading day, right? I ended red on Tuesday. I didn't feel anything. Wrote in my journal, I lost the trade. I followed my plan. It is what it is. So hopefully that resonates in any type of way. And as always, appreciate you guys for coming out. For those who are new here, we have these every second Sunday of the month. Next weekend, probably on Saturday, either 7 or 8 p.m. Just keep an eye out on the YouTube channel. We're going to have the Let's Learn with Advent class, which is pretty much the same thing as this, but with all the groups that I support. Everybody can pretty much come in and to the public, so you can invite whoever you want. So I'll probably put that out probably tomorrow, so you guys can just have it in your calendar. We'll probably do 8 p.m. on next Saturday for that. So keep an eye out. And thanks for coming out and asking your questions. I love this stuff. Of course. Thank you guys. I will see you next time and enjoy your Sunday. Take care.